Welcome back, everyone. It's time for another deep dive.
And this week is a good one.
It really is. We're going to be looking at the week leading up to Thanksgiving 2024.
That's right. A lot of interesting market activity happening, even with the holiday coming up.
Exactly. So we've got some wild Bitcoin stories.
Oh, yeah.
The Fed trying to figure out what to do about inflation.
Always.
And even a little glimpse into what 2025 might hold for the stock market.
Sounds exciting.
It is. We're basing this deep dive on a couple of news articles.
Okay.
And a really interesting economic calendar.
Lots to unpack.
There is. So let's dive right in.
Let's do it.
All right, first up, the big story that everyone's talking about.
I know where you're going with this.
MicroStrategy and Bitcoin.
They went all in this time.
They really did. They just bought a whopping 55,000 Bitcoins.
Yeah, for a cool $5.4 billion.
That's billion with a B.
It is, which is pretty wild considering they bought at all-time highs.
Oh, yeah. That average price per Bitcoin was nearly $98,000.
You have to wonder what their strategy is here.
Well, they're really pushing this idea of being a Bitcoin proxy.
Right. Basically, their stock is becoming a way to bet on Bitcoin itself.
Exactly. So if you think Bitcoin's going to go up,
You might just buy MicroStrategy stock instead.
and that's why their stock price has been so volatile,
Up over 515% year to date.
but down 15% just last week.
It's a roller coaster.
It really is. And it's fascinating because there are some people betting against them.
Like Citron Research, they're actually shorting the stock.
Wait, so they think MicroStrategy will go down,
Yeah,
but they're bullish on Bitcoin itself.
it's a little confusing.
It is. So they think Bitcoin will go up, but MicroStrategy will go down.
That's the gist of it. They think the stock is just overvalued.
Interesting. On the other hand,
You've got analysts at firms like Bernstein and Benchmark.
yeah.
They're actually raising their price targets for MicroStrategy.
So they think it has even more room to grow.
That's what their analysis is suggesting.
Wow. So it's really a question of
How much of their stock price is tied to their actual business?
versus just pure speculation on Bitcoin.
Right, and that's the tricky part to figure out.
It is, and it gets even more interesting when you consider this.
What's that?
A benchmark analyst, Mark Palmer, is predicting Bitcoin will reach $225,000.
By the end of 2026.
That's a huge number.
It is. If that were to happen, it would be a massive win for anyone holding Bitcoin.
Including MicroStrategy.
Of course, but, predictions, especially in this market,
Should be taken with a grain of salt.
absolutely. Things can change so quickly.
They really can. Speaking of big changes, Bitcoin itself has seen a huge surge lately.
Since the election.
Yeah, almost 50%.
It's been pretty remarkable. And you have to wonder if it's connected to the news about SEC Chair Gary Gensler stepping down in January.
Right, that could be a big deal for the regulatory landscape of cryptocurrency.
It could. And that uncertainty is probably fueling some of that optimism we're seeing.
So we've got the election results and the potential for regulatory changes all kind of swirling around.
And that's creating these animal spirits that economists talk about.
Right, those psychological factors that drive market sentiment.
Exactly. It's like
Sure.
a collective mood swing.
Interesting. So is this 2021 all over again?
Well, Ben Emmons from FedWatch Advisors had a good take on this.
Oh, yeah. What did he say?
He said it might not be full-blown froth territory just yet. There's definitely a sense that faster growth and more liquidity could push Bitcoin to new highs.
So breaking $100,000 is a real possibility.
It's certainly within the realm of possibility, but again,
The crypto is volatile.
very volatile, so anything could happen.
Okay, so we've got Bitcoin on a wild ride.
Check.
But what about the other big story, the Fed and inflation?
Oh, yeah. That's a whole other can of worms.
It is. And we've got some crucial economic data coming out this week, even with Thanksgiving.
Even with the holiday, the markets don't sleep.
They don't. And everyone's going to be watching this one indicator very closely.
The PCE index.
The one that comes out on Wednesday.
Especially the core PCE, which excludes food and energy prices.
Okay, so for those of us who don't live and breathe economics.
What is the PCE and why is it so important?
Exactly.
Well, it's one of the main ways the Fed measures inflation.
Oh, I see.
And they use that to make decisions about, you guessed it,
Interest rates.
bingo!
So it's a big deal because,
It gives us a snapshot of how prices are changing across a wide range of goods and services.
okay, so everyone's on edge because,
Recent CPI and PPI data have been a bit sticky.
meaning,
Inflation isn't cooling down as quickly as we hoped.
and this makes the Fed's plan to cut interest rates in December.
A lot more complicated.
I bet, especially with Fed Governor Michelle Bowman saying,
She's concerned about inflation stalling.
and that they need to be cautious about rate cuts.
The Fed is walking a tightrope right now.
They are. So what are economists predicting for this core PCE number?
They're expecting it to come in at 2.8% for October.
Right.
Would actually be an increase from the previous month.
If that happens.
It could really make the Fed hesitate on those rate cuts.
To add to the drama, the markets are now pricing in a 44% chance that the Fed doesn't cut rates in December.
That's up from just 24% a month ago.
So the market is starting to get nervous.
It seems that way.
We'll have to wait and see how it all plays out.
Exactly. And that's what makes this so interesting.
It does.
All these moving pieces.
The election, the Fed, Bitcoin.
With Thanksgiving thrown in for good measure.
It's a lot to keep track of.
It is. Buckle up.
We'll be back in a bit to unpack the rest of this deep dive.
Looking forward to it.
Yeah.
Yeah, it feels like we're at a turning point.
It does, and it's hard to predict which way things will go.
Definitely a lot of factors at play here.
Especially with the post-election landscape.
Right. The new administration's policies could really shake things up.
So we're all kind of waiting to see what happens next.
Yeah, it's this mix of anticipation and uncertainty that makes it so interesting.
I agree. So maybe we should shift gears a bit.
Okay.
And talk about that economic calendar we mentioned earlier.
Even though it's a shortened week.
Because of Thanksgiving.
Right. There's still a lot of important data coming out.
Yeah, like that PCE index we were just talking about.
Coming out on Wednesday.
Everyone's going to be glued to their screens for that one.
If that number comes in higher than expected,
the Fed might have to rethink their plans for those rate cuts.
It could really throw a wrench in things.
So besides the PCE, what else should we be watching for?
Well, on Tuesday, we've got the release of the FOMC meeting minutes.
Okay, remind me what those are again.
They basically give us a glimpse into what the Fed was discussing at their last meeting.
Oh, so we get to see behind the curtain.
Kind of. It can help us understand their thought process.
And maybe even predict what they'll do next.
Possibly.
What about Wednesday? Anything else besides the PCE?
Yeah, actually, we also have the second estimate of third quarter GDP growth.
Okay, and that tells us
how the overall economy is doing.
Right.
We'll see if that initial estimate of 2.8% holds up.
Fingers crossed.
And then, even though it's a short trading day on Friday,
yeah,
we still have the M&I Chicago PMI coming out, a measure of manufacturing activity in the Chicago area.
Interesting.
So yeah, even with the holiday.
It's a busy week for economic data.
It is. And all of this is going to be analyzed through the lens of the election results.
And those lingering questions about what the Fed will do.
It's a lot to process.
It is. Okay, let's switch gears again.
Sure.
And talk about those 2025 stock market forecasts.
Ah, yes. Wall Street seems pretty optimistic.
They do. A lot of firms are projecting some big gains for the S&P 500.
Ranging from 6,400 to 7,000.
Those are some impressive numbers.
They are, but it's worth noting.
What's that?
They're pretty close to the historical average annual return for the S&P 500.
So it's not like they were predicting something completely outlandish.
Right. It's more about the overall direction they're suggesting.
Which is up.
Exactly. Nicholas Colas from DataTrek made a good point about this.
What did he say?
He said the market rarely delivers that average return in a neat, predictable way.
So we shouldn't get too hung up on the exact numbers.
Right. The bigger takeaway is that they're bullish on the market overall.
So what's driving this optimism?
Well, Colas pointed to a few key factors, like a strong labor market,
Okay.
the expectation of lower interest rates,
Right.
and the potential for some pro-growth policies from the new administration.
You mean things like tax cuts and deregulation?
Exactly. Those could create a really favorable environment for stocks.
But there are always risks, right?
Of course, inflation is still a concern.
And the Fed could always make a mistake.
Plus, there's always the possibility of some unforeseen global event.
So it's not all sunshine and rainbows.
Definitely not.
Mm-hmm.
But there's definitely potential for things to go well.
It's all about balancing that optimism with a healthy dose of caution.
Exactly. Yeah.
It's a delicate balance, for sure.
It really is.
So much uncertainty, but also a lot of potential.
I think that's a good way to sum it up.
We're at a crossroads.
With a lot of different paths we could take.
Exactly. And only time will tell which one we'll end up on.
That's the beauty of it all.
Yeah. It is, in a way. We've covered so much in this deep dive.
From Bitcoin to the Fed to those 2025 stock market predictions.
It's been a whirlwind.
It has so given all this information.
What are your expectations for the coming year?
Well, that's the million-dollar question, isn't it?
It is. Will inflation finally cool down?
Will the Fed actually cut rates?
Could Bitcoin really hit $100,000?
And will the stock market keep climbing?
So many questions.
And no easy answers.
But that's what makes it so fascinating.
It does.
So as we wrap up this deep dive,
what's the one thing you want our listeners to take away from all of this?
What's the key takeaway?
I think it's that we're in a really unique moment in time.
A period of transition and uncertainty.
Both economically and politically.
And that creates both risks and opportunities.
Exactly. So it's more important than ever To stay informed.
To do your research.
And to be prepared for anything.
Be adaptable.
That's the key.
So basically, keep learning and stay agile.
Couldn't have said it better myself.
Well, that's what the deep dive is all about.
Helping our listeners make sense of the complex world we live in.
We're not here to tell anyone what to think,
but to give them the information they need to think for themselves.
And hopefully make some smart decisions along the way.
That's the goal.
All right, we've given you a lot to digest today.
Plenty of food for thought.
So go out there and do some more digging on your own.
And most importantly, enjoy your Thanksgiving.
Yes. Happy Thanksgiving, everyone.
And we'll see you next time for another deep dive.
Bye, everyone.